Mr. Rahul Kanodia, the Vice Chairman and CEO of Datamatics Global Services, is now joining us. Rahul, hi. Thank you so much for making time and speaking with us. Well, the year gone by has been quite stellar for you, 22% revenue growth, profit up around 20%. But the question is the growth in digital likely to be sustainable? Because the big peers are talking about slowdown in discretionary spend, and digital is also one space which is moderating as far as growth rate is concerned. Your take how FY24 will pan out?
24 looks quite promising. We don't see a slowdown in deal flow. Our market segments are responding equally well. Right now, we've incorporated, so to speak, digital across the board in all our offerings. So there is an element of AI, mobility, cloud across the board. So we are not seeing any significant slowdown on that front.
Not seeing any significant slowdown. So 21% growth is what you clocked in FY23. What about FY24? And also a word on the margins?
So given that the market is experiencing headwinds, we expect that we would have a 14 to 15% growth next year. We're not seeing any major problems for ourselves, and the deal flow is quite strong. As far as margins are concerned, we had an EBITDA of 16.6%. I think we should be between 16 and 17.5% next year as well, because we've been able to tighten our costs. And the supply side demand is also easing off. And therefore, I think we should be okay on the margin. In fact, it should improve.
Mr. Kanodia, hi there. Afternoon. Given the fact that the majority of the revenue, at least from overseas, is a bulk coming in from the USA, can you just walk us through for BFSI with the slowdown taking place over there? Is that going to be a concern? Can we assume that the revenue from this geography will now be hit?
No, the revenue from the geography will not be hit. Our segment is the BFSI. That is the largest segment. It is a little softer, but I don't expect a major downturn in that front. In fact, the inflation in the US is helping us because we are able to go back and renegotiate prices with customers because they are experiencing higher costs themselves, both in the US as well as Europe. So I don't expect any major challenge on that front. It will be a little softer, though, but it'll not be negative.
You're also sitting on quite a bit of cash, at this point of time on your books. What are the plans for utilization of the same? And going forward, what are the new products you have in the pipeline?
So we are in negotiations with some companies and dialogue with some companies for acquisition. So we will acquire, our plans are to acquire somewhere between $20 to $50 million in acquisition this financial year. So those activities are going on. In terms of new product launches, actually, there are no new product launch. We are just augmenting the current base that we have. The market traction is very, very good for the products we have. Very good analyst support, very good customer feedback. Deal size is increasing. So with all of that, we just need to push that harder. So we don't plan to launch any new product, but just double down on the existing portfolio that we have.
Portfolio, not looking at making massive launches, but I just want to come back. I think you did point out that the revenue in FY24 is going to be 12 to 14%, or did you say 14 to 17? I missed out what you said.
To 15%.
Okay, 14 to 15%. But the other thing I was watching in your numbers was the fact that the client concentration continues to be quite high. Are you looking at diversifying? And with respect to the negotiations that you pointed out, are you able to get the realizations and price negotiation higher, or they've plateaued a bit?
No, we are able to get some price negotiations upwards. Our client concentration is not very high. The top 5 is about 24% of our revenues. And of course, as we acquire companies, that will probably come down. So I don't expect any major concentration challenge. The top 10 is about 36% of our portfolio. So.
Good to know. Thank you for clarifying that and giving us a sense as to how the business is shaping up, Mr. Kanodia. That's a word coming in from the management of Datamatics. Pretty confident that as of now, there will be a little bit of softness, but no worries about a degrowth. 411 is where the stock is currently at. With news that we're at 18,170 and the broader markets up 1%, we'll take a very short break. Stay with us as our fundamental guest joins in to walk us through his outlook.